Good morning, everybody. Happy New Year to you all. 2025 is here, the first full trading week of the new year, and it's been fun and games already. Happy New Year to everybody there, Paul, everyone else, Angela, Mark, Bran. Yes, it's good to be back. I hope you all had a nice break. I had a bit of a nice break myself, so I'm not 100% on top of what's been going on, but not that it looks like there's been much going on anyway, but a few things to get our teeth stuck into. So let's do that, and we'll also have a look at what's coming up this week, because it's a busy old week as well. So we'll get stuck into things. Right, where first? Let's start off in China. PBOC vowing to cut the RRR and other interest rates at the appropriate time. It's also going to monitor changes in long-term yields, which have been flapping around quite a bit recently. As far as the currency goes, they're continuing to fix at 718s, 718.76 was the last night fix. That's down 2 pips from 718.78 previously. So they're keeping the reins on that. I've actually started a short this morning because we're knocking up against these high resistance areas where we've been previously. So I'm starting just to nibble some shorts, because I'm seeing just the odd comment that they're not going to let this one run too far at the moment. That they are waiting to see what Trump's policies are, like everyone else. But the fact that we've come in the new year, we've had a couple of holds up here now. I've just started to short up at 735, near 735.50. So that one okay for the moment, but I'm happy to keep that. Got quite a tight stop loss on that one. One of the things they've been doing is their stock exchanges have asked some large mutual funds to help restrict stock selling at the start of the year. This is something that they did previously when stocks were tanking a bit. So they're getting involvement there from mutual funds and other banks as well, just to stop things from getting too wobbly over there. On the data front, it's not looking too bad. We had the Caixin PMIs coming out, coming in for services, better at 52.2 from 51.7 expected, 51.5 previously. So on the economic side, things aren't looking too bad at all. Over in Japan, we've had their services PMI out as well, softer than expected, coming in at 50.9, but up 4 pips on last month. So a little bit of good news. Bank of Japan's Ueda has been speaking again, saying that they will raise the rate if economic improvements continue, but he's still saying the same old lines, waiting for things to fall into place if things go as the outlook suggests, blah, 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 blah. Still not tipping us anywhere closer to when a rate hike may come. Also keeping the cautious tones, saying that the bank must be vigilant to risks in deciding rate hike timing. Into Europe, and its final and fresh services PMI day there as well. Fresh one is Spain, seeing a decent jump, 57.3 versus 54.1 expected and 53.1 previously. So very decent, over 4-point gain there. Italy as well, that's a fresh one, so up to 50.7, again beating expectations, moving into expansion. Over in France, and these are finals, services there showing an improvement as well to 49.3, so a decent uplift on the flash number. Germany as well, they moved into expansion in the flash number, and they improved on that to 51.2 as well. Bit of a mess going on in the regional German CPI numbers. Some of your calendars may be showing that all the regions were going to be reporting today, but apparently it's just Hesse. The others will be reported on Thursday. There's some regional holidays in Germany. Bit of a mess up because Reuters reported the year-on-year number at 1.8%, which looked like a 2 pip drop. However, that 1.8% was in fact the 2024 total. Okay, so that was the change in the whole year over 2023. Inflation rose 1.8%. The December number, which is the one we were waiting for, actually rose 2.7%. So it went up, well up above the prior number of 2%. So that caught the market on the hop. Now, we do get the rest of the regional numbers on Thursday. Not that it matters, because later on today we get the pan-German number, the flash number for that at 1 o'clock. So that is coming out anyway. So it's going to largely make those regional numbers redundant, because everyone will be focusing on that. But if Hess is an indication, then maybe we should be looking a little bit higher in what comes out later on than what's expected. Only a couple of pips up in CPI, a pip up in the Eurozone HICP measure. As I say, we've only had that one number, which was quite a jump. The PMI in Germany also indicated heavy price pressures still there as well. So big old stagflation for Germany at the moment, low activity, but increased price pressures. So that's going to keep an intense amount of pressure going on over there. But that's what we should maybe expect for the German CPI numbers later. We've got the UK PMI out as well, which went backwards a little bit. The final number coming in at 51.1 from the flash number 51.4, still an improvement over last month. So better there as well. Similar readings to Germany, increased price pressures, lower employment, weak activity. So it's not looking too good ending the year in the service sector for the UK, despite that positive expansionary number for that. Coming back to some of Friday's data over in the US, because we had the ISM manufacturing number over there. That came in at 49.3, so an improvement, staying in contraction, but still looking a bit better. Prices saw a decent jump as well, 52.5. Employment, though, looks very soft, 45.3. It should be remembered that manufacturing has been on the soft side for quite some time in the US, as it has been everywhere else. But that employment number there might have some influence in NFP week. We do have the ISM services coming up this week as well, which I'll point out shortly. Fed heads were busy in the new year. Fed's barking, saying inflation is nearing target, but there's more work left to do. He wants rates to remain restrictive for longer, given the possible upside inflation risks. Says the conditions for cutting again includes confidence in inflation's return to 2% or a weakening of demand. So it looks like we're painting him in the hold column for now, further Fed meetings. Fed's Kugler says there is a view the Fed can take its time on future cuts. Over in geopolitics or political sphere, Mr. Trump is potentially up before the beak on the 10th of January after the New York judge denied his bid to dismiss the hush money conviction hearing, which Trump tried to put aside due to his election victory. The judge there saying that he has to appear either in person or virtually at the hearing, as I say, 10th of January. So that will be interesting as to what happens there. Although the judge says he wasn't inclined to give any jail time if in terms of sentencing, if that is to be the case. But still, that one is hanging over the orange one's head. US Speaker Johnson won the vote in the House, so he's top bod there. He says that Trump's major legislative agenda will pass by May. Obviously, we're all waiting for the inauguration date later this month, and then to get the full draft or full slate of Trump policies to go through, tariffs and all. But Johnson says that agenda will be looked to be passed by May. Over in Canada, more political strife. PM Trudeau, according to reports, is likely to resign this week. Could be as early as today, although sources after that that news dropped said that he's not made a final decision. So we're on tenterhooks regarding that one. We pretty much knew this was going to be coming. It's been a mess over there. Basically, as we like to say in football, Trudeau has lost a dressing room. So his caucus and all his party losing faith in him. So it looks like he's going to step aside. Elections are still slated for October, but him resigning may raise the prospect of getting earlier elections if they're pushed for. So we'll have to wait to see what happens with that one. So potentially all political change happening in Canada. We shall see. That's round about it on the news front. As I say, I'm just playing a bit of catch up myself, as I'm sure you all are too. So we'll have a look at what's coming up this week as well. Let me get my calendar up. There we go. Pop that in there. So a couple of things to be aware of. Firstly, on Thursday, it's a partial holiday. It's the National Day of Mourning for President Carter. So stock markets will be closed. Bond markets will be shutting early as well. I don't know what that means for the data, if it's getting booted. Not that we've got a whole lot of US data. Jobless claims, Challenger report, that's a private survey data. So that I'm not sure what's going to happen with the data Thursday. And we're not sure whether it's a full holiday or just a one-off type thing. So we'll keep an eye on that one anyway. Anyway, coming back to today, as mentioned, got that German CPI later, and then we've got the services. This is the S&P Global Services number coming in later on, as well as factory orders. Then tomorrow we get some more CPI data, Swiss CPI, French CPI, and the Eurozone flash CPI numbers coming out as well. Over in the States, as mentioned, we get the services index and JOLTS because it is jobs week this week. Bit of data coming on Wednesday as well throughout Europe. German retail sales, not too much in the US apart from the ADP number and FOMC minutes, as well as consumer credit. The minutes, they don't tend to be too important. For one reason, we've heard from Fed heads a million times since last FOMC. Secondly, it's all changing up in the voting system anyway. So we get new voters in and people off. So old thoughts don't really count for much in those. On Thursday, Aussie retail sales. Then we get some inflation data from China, which may play into their decision on when they're going to start cutting rates again. Eurozone retail sales, ECB minutes. Again, we've heard from them 1,000 times. So maybe nothing fresh from that. I'll be keeping an eye on Challenger job cuts. It's only a small report, but it has been running quite hot lately in terms of layoffs. So we'll see if that continues, whether it's going to give any signals that maybe some softness in the jobs market is picking up. You'd know it from the NFP number anyway. Going into Friday, a few bits and bobs out in Europe, but then it's double bubble jobs day, both Canada and the US reporting their jobs numbers. So that's going to be a big Friday to get us all off, which reminds me I need to get the NFP competition going. So starting off, lots of work to kick off the week. So that's the week ahead in terms of the data. So lots to look at. It's going to be a busy one. So let's take a look at what's going on in markets at the moment. So we've seen a bit of a recovery in the euro this morning. We had that New Year's dip down through 103, down on close to 102, which is a pretty big area. It's 61.8 fib of the 2022-2023 swing up. So it's quite a key level there. Also, it's been a prior level as well, and that goes back a bit further. So the fact we got close there but didn't really tackle it, and we've seen a decent bounce since, just tends to think that we've had some end of month stuff, end of year, new year stuff going through that period there. We're back up into this zone that we had. This was the support area we had late November through December as well. Pretty sticky support area down at 103.30s. We're back above there. If we start to hold this point here, 103.30, then it's going to just make this a bit of, as I say, bit of New Year's action down here, and then we're getting back to more significant trading. Top side, for me, nothing really happens unless we get above that 104.50 area. That was a level that was highlighted in the latter part of December. Again, it was another support area that we had a break, found resistance, and we kept finding resistance there. So that's really the key level. It's potentially becoming the new 105, maybe the new 106. So keep an eye on that one. If we get up there and hold it, then that's going to keep the bearish pressure on, and we're potentially going to see further downside. But for now, this week, it's probably a case of a bit of price discovery, seeing what this wants to do. Do we bounce further from here, or are we going to wash it out and come back down again? Dollar CAD looking pretty interesting. We had this high made 18th of December. We've had a couple of goes up there, and then we had the New Year moves, which again got up to that level and held it. So that's developed into a bit of a significant short-term top, at least. You know, it's lasted over a couple of weeks, even though there's a lot of holiday stuff in there. Support-wise, pretty clear down towards this 143, what you want to call it, 35, 40-ish area. So a decent bit of sideways action, decent confirmed range to trade. So you can either try trading in between, or you wait for the breaks either way and go with that. I'm not sure what is going to happen with this Trudeau stuff. As you can see, we've had a little bit of dollar weakness stepping in as well this morning. Not too much, and it's not wholesale, but maybe some of this Canadian gain is on the fact that Trudeau's off, which means maybe someone new coming in and a bit of stability coming in. But I'm not 100% up on that. So for now, if you're not sure what's going on, just you've got two clear levels to trade there, and that's all you need for the moment. Looking elsewhere, dollar yen. Oh, come on, there we go. Still struggling up into these high 157s and at 158 area. So really, it's going to take a big bust of this 158 level for us to carry on going up. But also, it's not looking like it's going down too much either. On the BOJ side, their lack of any clear note of when they're going to hike again is probably playing into this, as we said, in the latter part of December, and going into that last BOJ meeting, that if they weren't given any hawkish outcomes, this one will be shooting up. But we are stopping for the moment. Now, keep an eye on this one. You need to keep an eye on US yields, of course. And they've been pretty heavy. They've been pretty high at the moment. We got above that 450. That's a part of December. We found a bit of a level up against these 460, 465 area. Now, this 450 has been pretty good as support, but obviously you have to look at what's going on in the price side of things. So that 450 is around the 109 level, around this area here. So we're holding below there, which was that prior low there. So that's basically your 450 in terms of price. And here is your 464, 65 at down into 108.07s. Now, so this pattern is looking pretty similar to what's going on in dollar yen, where we've got up to these highs and we're not getting through it. So if we see yields breaking higher, then keep your eye on dollar yen. It's likely to go with it in part. So just coming back to dollar yen quickly. If we do break up, then it's going to be all about the 160s level and this big old high here up near the 162s. As I say, dips still looking very shallow at the moment. We're not pulling back too far. So that seems to be the way the market is taking it at the moment, by the effing dips for now, it seems. Looking at some other bits and bobs, euro sterling, always a good gauge of what's going on between the euro and cable. As always, cable is looking a bit on the weak side, and we're holding up around this 83 level, but not looking like we want to go too far at the moment. 83, 20, 30 up into 40s is the next level to watch on here, but we're building a bit of a sideways range. Still haven't had a real test of that 82 level yet, although 82 15s 20s, that's getting close enough perhaps, but still a big level down at 82. But otherwise we're still in this bit of sideways range for now. We're staying back above this zone here as well, but no real direction from this one at the moment. Looking at the Antipodeans, Aussie dollar, that's had that break under that zone, and we can't get back to it at the moment. So that's the area to watch. We did get close to that low down there, 61.64, which is a bit of a line in the sand. There's a bit of empty space under that. So we bounced from there. So now we really need to see, are we going to retake this zone, or are we going to hold it? If we hold below, then that's going to put further pressure on that downside there, that 61.70 level. And say, if that goes, then we could have a bit of empty space down below. Kiwi as well, we had a bit of a level down here around this 55.80s, which we have held initially. It's a bit of a on-off area going back. It's not too clear on this weekly chart, but if you zoom in a bit, then it does clarify itself a little bit. It's a level that we've dipped below previously, but can't stay below for a while. So bear that in mind, that we might get some blow throughs, but whether they hold or not is another question. But for now, we're getting a bit of a bounce, although it doesn't look the strongest of bounces, particularly after this decent break here. So again, this is your support up here. 58.40s is your resistance, although we've got more short-term stuff coming in, probably around 56, 60, 70, then maybe into this area here, 57.50, 60, then into the 58 figure. So little small areas just to keep an eye on if we do bounce from there. The only position I had on coming into the new year, I got to put out the rest of my euro dollar longs from the 103.50s that I took prior to the holidays. They went out, my stop loss gave a little bit back on the balance. But Aussie Kiwi has been on the rise again, but we've had a little tap of the up near the 111s, can't get through for now, but it is holding into this 110.50 area. So I'm still short this, still happy to stay short this one for a little bit, but I might be reassessing if we bust back above 111, see what it wants to do. But this is definitely looking pretty strong for now in terms of a trend, these higher lows and higher highs just in this phase. Some may think it might be developing into a bear flag, who knows, but for now it looks like it might want to push up a bit, but 111 is really the level to keep an eye on here. But I'm staying short for the moment, just while these levels hold. But as I said, if we see another rally, I might have to change my tune. All right, just to let you know, K-Man's off until Friday. I'm not sure if he's going to be back for the show on Friday or what, but he's off this week. So just me, myself, and I to keep you company for this week. So if you've got anything you want me to have a look at, then please put it in the comments if you're here on Zoom, and I'll take a look at that for you. Otherwise, I'm not doing an awful lot. As I say, I'm just doing a bit of news, price discovery at the moment, see what's going on, get back into the swing of things after having a week or so away from the screens. Always nice to shut down and get a move on. Right, let's have a look at a couple of others. So gold, not looking like it wants to go anyway back to these highs. So this one, I think, again, you just got to see what these first few days of New Year bring in this first 4 weeks, see what the metals want to do, as well as other assets. We are holding this level once again. It's been a bit messy, but you can see these holds and breaks and support resistance. So it's becoming a little bit of a pivot area as it is down to this 2600 figure. Also, it's 2670 has been again a bit of an on-off support and resistance point. So we haven't quite got up there, but got a little bit of a range perhaps developing, and then as usual go with whichever side breaks first. But I think you want to see it under 2600 and holding before you think about further downside. And again, you want to see it above 2670 and holding before thinking about any upside for that one. Stocks as well, I'm keeping an eye on this one too. I am still running a buy stop through the 6100 level, but I'm not really inclined to be buying dips at the moment. I think we're seeing a bit of indecision coming in. Trump is going to be a big factor in the next few weeks, and what happens in terms of policies. We get into that crunch date, we could find that the market is doing a bit of wait and see what comes. Is it going to be really bad news for the US? Are his policies going to impinge on potential US performance? Is he going to shut the door to everyone? We'll have to wait and see. So I think we might be heading for a bit of sideways action in this one before we get to that point and know what he's going to do with policies, tariffs, and all the rest of it. So a bit of a waiting and watching game for this one at the moment. Derege dollar Swissy, which is usually anti-euro dollar. Let's have a look. Where are we? If I can even find it. There we go. Right, let's have a look. Bit of a wide view in this one. So I can probably boot that off up there. Let's start with that. Oh, come on. No, let's take that off and do it manually. There we go. Up there somewhere. Right, close enough for now. So this one, you know where the high is, where you want to be looking. It's up towards this area here, up towards the sort of low 92s. That's where we've had a lot of action. All these V-shaped bounces, we've got up to there and can't get through. So we're heading that way again. We'll have to see if this dollar buying continues broadly, though we're seeing it a little bit off, as I say, today. That's your big level. It's over a decent period of time. So if you're, depending on what you're doing, Derege, I don't know if you're short or long, let me know, as always. But just looking at this with fresh eyes, this would look potentially good for a break trade, i.e. sticking a buy stop, maybe somewhere like, I don't know, 40s, 50s, just above there, just to catch a potential break if we start breaking above these levels, because it does look key. We've held there, we've held there, we've held there over a decent period of time, and we keep coming back from there. Obviously, big old range that we've got down here, 83s up to 92s. So in the shorter term, obviously this high you need to keep an eye on. Support down into the 90s, 90.25 down towards the figure is going to be your support area. Then we get into further support further down. You're long. Okay, where are you long from, mate? Much further down, I hope. Hopefully right down here, but I don't know. Let me know that as well, because if you're long further up, then you have to be careful. As I say, 90, 20s, 25 down to the figure. That's going to be a bit of a crunch area. If we're back below there, then some of the heat is coming out of that as well. But otherwise, if you just want to see this high taken out, where is it? 91.30s. Do that, and then you got this just high area across there. Let me stick a line in. As you can see, I don't look at this one too often. So 91, 50, 60 is your next level above that you want to be getting over. Do that, then you're going to be up testing these highs again. So these are the early levels that we've pulled up a bit short of this area here, this level here. Just takes a bit of the pressure off at the moment. So, but nothing in this trend is looking like trading at the moment. So context wise, this trend is still very, very strong. We've seen it before, several times before. We've seen these bouts of strength, but we can't get through that level. So you're long from the 89s. So yeah, nice trade, mate. So you know where your pain is. So you're down here somewhere. That'll be your secondary level of support if we get back down there. Otherwise, I hope it goes for you, mate. And just looking at this, I may be interested in sticking a little buy stop in there if we see the dollar continuing. But again, that's going to be a lot reliant on Trump and whatnot. Right, anything else for anything else? Otherwise, I might call that an early one, seeing as it's the first day back and we're all getting back into the swing of it. So let us know. I'm not looking at too much myself at the moment. So yeah, last orders, boys and girls. Otherwise, I could call that a session for today, and we'll catch up with any of you, to all of you, tomorrow. No problem, Mark. Doing your homework, Brian. Always good to do, mate. Right, we'll call it a day then. Have a great trading week. I hope you have a great trading year. Try to make your first trade. Don't force it, but try to make your first trade in the new year winner. It's something I like to do. Just psychologically, just get the first one under the belt. Set us up for the rest of the year. Silly thing I do. Anyway, have a good one, everybody. Thanks for coming. Catch you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.